Meanwhile, the Dow Jones Industrial Average yesterday suffered its worst day since those dark days of March 2020. The Dow plunging more than 1,100 points amid renewed concerns over inflation, with experts blaming the sell-off on disappointing first quarter earnings from Target, Walmart, and other major retailers. The S&P 500 and NASDAQ also closing down yesterday. Traders are concerned rising costs are hurting corporate profits and consumer demand. Joining us now, CNBC's Brian Sullivan to help us sort through all this. Sully, it's good to see you this morning. So what all went into what we're seeing, not just yesterday, but expect to see today as well?
Yeah, it's a dramatic turn in the consumer. Willie and Mika, good morning, everybody. I mean, inflation is just out of control on so many levels. And by the way, you did the baby formula story, powerful stuff. Those costs, if you can find it, are also going up. The cost to manufacture, deliver, transport, everything just continues to rise. And it's really, in many ways, guys, just an energy story. I mean, we talk about oil and gas and the energy transition. The price of diesel fuel at certain gas stations around the New York City area is $7 per gallon. That is the rough equivalent of $300 per barrel oil. Now, oil itself is at about $110 per barrel. I know that's the New York area, but there are very real fears of shortages of diesel fuel, jet fuel, and even gasoline this summer. That is driving up the price of everything. And when you factor in making something, shipping something, driving something to the store, it's going to be incredibly inflationary, and the consumer has really slowed down, and that just absolutely crushed the stock market, not just yesterday, but really all year. It's one of the fastest turns in consumer sentiment I have seen in 25 years.
So, Brian, I'm trying to think of what exactly control the United States government has. I guess the Fed chair probably has options here to try and stem the tide of inflation, but we're looking at rising interest rates, aren't we? How does that help? But ultimately, I still see a lot of Americans getting locked out of this economy, not having homes, not being able to afford anything as the government tries to fix the problem.
The problem is, and I think you nailed it, Mika, is that the only solution is to bring the economy to a halt, is to maybe force a recession. I know that sounds ridiculous as a, quote, solution, but we learned in the late 1970s that when inflation is out of control and unemployment is pretty much maxed out, pretty much anybody who wants a job can get one, the only way to slow inflation is to slow down the entire economy. And that's basically what the Fed chair yesterday said that they were willing to do. So the double whammy is that, and sort of the sad paradox of this is that as inflation rages, the only way to slow it down, well, there's two ways. Demand destruction. People just simply say, you know what, I'm not flying, I can't deal. Or you raise interest rates, which means, to your point, if you have credit card debt, which has gone up 21% year over year, if you want to buy a home, if you've got any kind of loan and it's not fixed forever, the rates on those are also going up. So you've got inflation already on everything and now inflation on your debt. It's going to be a tough combo.
So we're looking at, and let's just break this down, what you just said, because it seems to me, unless there's some sort of external solution to this, but I'm only seeing outside of the United States of America a food crisis coming our way due to the war in Ukraine. But we're talking about housing prices having interest rates, maybe what, 7-8%? I mean, how high would perhaps the Fed chair have to raise them to slow down the economy? And buying a car. So housing, cars, food, credit cards, this is going to be a nightmare.
If you can find a car, I mean, we still have the supply chain issues, Mika. In fact, there are a number of used cars that are going for higher prices than the same version new. A 2-year-old car with 20,000 miles costing more than the new one. It sounds insane, but it is. To your point, though, I think this is really going to be the story. And I was in the UK back in November talking about the impact of energy inflation on things like food and electric bills. Don't leave out, by the way, people's electricity bills. They're going to spike this summer. And if you're on a fixed rate plan, it will reset a lot higher. What people may not realize that fertilizers are almost entirely chemical. It's not cow poop anymore. It's chemical. And those chemicals are made from things like natural gas. The ingredient costs are soaring. The price of fertilizers is about $1,300 to $1,500 per ton. It used to be about $200 to $300 per ton. So there's going to be a lot of places. We're lucky to be here in the United States where we can probably largely afford this. But to your point, the food costs in emerging markets, lower income nations are going to be out of control. And Ukraine's a major producer and exporter of these fertilizers, wheat, certain types of corn, and certain types of oils. There are very real possibilities, and it's already starting in places like Sri Lanka, Mika, that we are going to see critical, not baby formula shortages, but food shortages for hundreds of millions or potentially billions of people the longer this drags on. It's a terrifying story. I hate to say it, but we need to acknowledge it. It's real, and it could happen. We need to get these markets reopened.
All right, CNBC's Brian Sullivan, thank you very, very much for coming on this morning. We'll be in touch. And